So comparing depreciation methods. So for a planned asset in straight line, it generates revenue evenly over time, right? So that is best meets the expense recognition principle, right? So you are using the asset for 5 years, so you reduce the asset equally or evenly in 5 years. The unit of production method, it's best for the asset that wear out because of use. For example, truck, the more it runs, the more it loses its value, right? Straight line is best for the plant that generate revenue evenly. Unit of production method is good for the asset that wear and tear out according to the use, and double declining method is used for the assets that generate more revenue in early years rather in the end of its year. So answer me, for plant assets, for example, the production plant, the best one is to use straight line method. For that plant which runs out, or that machinery which runs out with the excessive use, for example, the cooling system installed in the building, AC, and the furnitures, truck, vehicles, the machinery is heavy machinery, earth machinery, use unit of production method. For technological devices or equipment, use double declining method. Why? Because the technology changes very fast, so it's better you charge its depreciation heavily in first year, early years, rather than the late years. Okay, so let's comparing this through figures. We have already done the truck example here. So at the end of the year, sorry about my lining here, I'm just gonna remove that. So at the end of the year, total depreciation is same, 40,000, 40,000, 40,000. But during the year, the amount of depreciation varies, right? And if you show this pattern to a layperson, he will say that nothing matters since you are learning accounting. And my answer would be, it does matter. How? If you are using straight line method, your profit will be also smooth, right? Every year a fixed amount of the expenses deducted. If you are using unit of production method, your profit varies. In some year your profit would be higher, in some year your profit would be lower. Why? Because depreciation is going to be higher and higher and then lower, right? So if you want to show at the end of the, for example, the CEO came and now it's time for him to retire, then he would show the highest profit, that I left my company with the highest profit, right? And for example, he changed it to unit of production method. In its first years, the profit going to be lower. Why? Because depreciation expense is higher, and at the end of the year, profit start increasing, right? And if he can say that, look, I made my, during the tenure of my period, I increased the profit at the end when I am about to leave the country, leave this company, right? Similarly with this double declining method, you see, at the start of the year the profit is lowest and then it start increasing, and at the end of the year the profit is the highest, right? Same logic like here. So at the end, the total amount, if we find out that it is the same, but each method has its different implications. Similarly, if we see the tax point of view, right? So when profit is high, tax is high. So tax at the start of the Here when you are using unit of production and double declining balance method, at the start tax is lower but gradually increase and highest at the end of the useful life of the asset, right? So higher profit means higher taxes as well. So it depends on your motive. If you are given motive to reduce the taxes, you may choose the alternative method. If you are given the task to increase the profit, so you are doing nothing, and just by using different methods you can increase or decrease your profit. So that's why in finance and accounting it is said that profit is not equals to cash flow. So that's why we call that, if somebody is believing the what is written on the income statement, it is the profit, and that is actual amount that is in the bank account of the company, that is wrong. So we have to look at the cash flows, whether the company has actual cash flows to back up that claim it earned profit or not, right? So through graphical representation, the straight line depreciate the asset evenly, while the unit of production according to the its consumption, while the accelerated method or double declining method, it decrease the value sharply, right, over the period of time. It means highest early years and lowest in you know coming years. So exhibit 7.9 of your book chapter is shows the depreciation method used by most 600 companies of the world. So 88% use straight line method, 7% use double declining method, and they would be mostly tech companies, and 4% use unit of production method. Other methods going to be like 1%.